Okay, great. Hi, everybody. Hello, sharks, and hello, Shark Pool community. It is awesome to be a part of this. I've been to the last two of these and have been blown away by the power of this group and the magnitude of the people in the group. It's truly a premier event, in my opinion. Valerie and Cornelius have done an amazing job with this. So thank you for the opportunity to present this exciting opportunity. We're here looking for equity partners to help share in the ownership of buying this 43 unit apartment building in New Albany, Ohio, which is a suburb of Columbus, Ohio. And it's the municipality in which the new Intel microprocessor plant that was just announced is going to be built. And that's obviously a big part of what we're going to be talking about. And it's an awesome story. We're really excited about it. This is a property that we started courting, I guess you could say, over a year ago. We met the builder when he was building it and got to know him and his techniques and material sourcing, and really loved the project. And eventually we put it under contract, and at just about the same time we put it under contract, Intel came out with the announcement that they were building a $20 billion facility in New Albany. So just to mention disclaimers, once again, we have to mention our own. I won't read these, but they are what you would expect in the way of disclaiming about commercial real estate investing. And so please review at your leisure.
Hey, can you put the black box that says welcome?
Yes.
Yeah.
I've got a black box over that.
Yeah.
I don't know how to get rid of that. Darn it.
What happened? You press start rehearsal. What happens that? What happened? You press the red button. What happened?
Okay, I'll just go with it. I don't know. Okay, there we go. Okay, so the Intel plant, which was announced, like I said, in about the time we put this under contract, is going to be a $20 billion facility that may end up going to $100 billion facility when all is said and done, when all the phases are done. Construction on that begins in October of this year. And it's going to bring about 3,000 direct high-tech jobs to the economy in that immediate area. In addition to, they're projecting about 7,000 support service jobs and construction jobs related to the project. It's going to be the largest superconductor facility in the world. And so it's going to be quite an economic force as we move forward. We'll talk more about that. I wanted to say that, one interesting thing about the timing was we had control over the contract on this property before the project was announced, and we feel like we really caught lightning in a bottle with being able to capture the economic expansion that's going to happen there. So I'll hand it over to Chelsea to tell you a little bit about the building. Go from there.
Yep. So this is as Tate mentioned, brand new 43 unit A-class community. It was completed in 2021. And we are currently at 63.5% occupied. The on-site management team is, in lease up mode, expected to be 100% occupied by June 1st. We are due to close on June 25th. However, as per our contract, it has to be a minimum of 90% occupied. It's a nice mix of 1 and 2 bedrooms. So we've got about 16 1 bedrooms and 27 2 bedrooms. I believe all of the 1 bedrooms are already leased. And the price per unit here. So it's a $9.3 million purchase price, which equates to about $216,000 per door.
Okay, now I'm frozen on the screen. Here we go.
Okay, some interior photos. As you can see, no expenses were spared here. We have luxury granite waterfall countertops. We have composite flooring that is quote unquote bulletproof. However, this is an A-class community and an A-class neighborhood, so hopefully we don't have to worry about any bullets being flown around. Designer backsplash, solid wood cabinetry, two-toned uppers and lowers, of course, brand new appliances, LED bath mirrors. I mean, this place is built for a young professional who is making six figures, which is above the average income per person in this market. So I think people are really excited to live in this community, brand new. Some things that we really love about it. So it's a boutique community, which we think is an upside in this market. Most of New Albany is single family homes. So this is an opportunity for those who maybe aren't ready to forego home ownership or there's low inventory. We have 43 at New Albany to call home. One of the couple of things that we love about it is that not only it's a boutique investment opportunity, it's just nestled off a main road. So as you can see, there's two playgrounds here in the bottom right corner of that left page. That's actually a daycare center. And behind that, we'll see in a little bit, is a huge state park. So I think our greatest amenity is truly outdoor space. However, we do have a gym, a leasing office, a community room. There's detached parking garages that are hooked up for electric vehicles, storage, kind of a recap here, facial recognition, security. So just kind of again to reiterate that this builder went sort of above and beyond as far as finishes and fixtures here. So we're going to kind of just jump ahead right here into the rent comps. This is a major factor when we're underwriting what our projected target rents are. So our subject property here at the top highlighted in pink, we're getting about $1,200 for a one bedroom, which is significantly lower than all of the comps. And one thing I do want to add that these in-place rents, we're actually, as they're going through lease-up phase, are getting closer to our pro forma rents, which are closer to about $1,350 for a one bedroom. So the on-site management saw this opportunity and demand, and we're excited to see that we're accelerating quickly there. Two bedrooms, two baths. So that's also great to have in this submarket is the two bathrooms. Although the price per square foot is probably in the mid-range here. We think this is, and we know this is, by far the newest asset, and is just really going to set itself aside from some of these larger places where you might get lost in the shuffle.
Great, thanks, Chelsea. So the story of New Albany, you can see in this picture on the right that our building is in the lower right and right down here. And the rest of New Albany is largely single family houses. The median house price in New Albany right now is about $750,000. The gross median household income in New Albany is over $200,000, $203,000 roughly. Gross median household income. That was before the Intel plant. Anybody knew anything about that as well. One other quick note, Chelsea mentioned this large park just adjacent to our property across a small street is a massive park that's got basically wilderness in it and trails through it. But it's essentially like the land was when it was originally settled. So, and that's going to stay. That's an actual park. The population growth in New Albany itself has been really, really strong, 43% since 2010, compared to the Columbus MSA, which has grown 12% since 2010, which makes it the 17th fastest growing city. And you can see that in the demographic charts here, the different demographics. The story about Columbus in general is it's got this Columbus advantage that businesses love. And so there's a number of Fortune 500 companies headquartered there. There's a lot of retail headquarters there. The two large economic forces in Columbus, as probably most of you know, are the state government, which has massive infrastructure, huge employment, and is very, very well funded. And also the Ohio State University, which is the third largest university in the country, and also employs thousands and thousands, has about 60,000 students, I believe. So those are the two, like, just steady Eddie factors in the economy there. Amazon has opened two stations around Columbus, and Nationwide Insurance is headquartered there. It's a very diversified job market, and this new Intel factory is going to make it a center of high tech. It's basically, you're catching a high tech market at the very, very beginning here. So it's going to be very exciting moving forward. We've talked about the Intel plant. It's just worth mentioning one last time. Again, the numbers: almost 10,000 jobs in the New Albany submarket, and is going to be anywhere from 20 billion. And some people are saying when all said and done, when all the phases are completed, that'll be around even 100 billion when it's done. So it's going to be a huge economic insulator from, in our opinion, from the forces of recession that might affect the job market. You've got just so much capital coming in and investment money into the market. So we're very, very excited about that. So Chelsea, I'll hand it back over to you. Talk about returns here.
Yep, thanks, Tate. So some of the juicy details here. What can you expect as a limited partner LP? We are offering a preferred return at 6%, which will be paid quarterly. We have a projected 17.91% IRR, and this is a 5 to 7 year hold period. We do have fixed debt for 5 years plus a 5-year extension with no prepay. So at this point, we're underwriting 7 years. And of course, that's subject to market conditions. But in any event, I won't go too deep into what these returns look like. Just an example of, if you are to invest $100,000, what do those returns look like? And there'll be a high-level overview summary a couple slides down from here. Again, as I mentioned, 5 to 7 year hold. We will exit dependent on market conditions. Because there's no true forced depreciation through a value add opportunity, because it's a brand new asset. This is a core plus deal where we're looking at organic rent growth, and we've been pretty conservative in our rent growth over the course of the 7 years. By no means are we at 10 or 12% in our underwriting. We're closer to maybe 5 or 6. So taking that into account, we hope to exceed that. Purchase price, $9.3 million. The total equity required will be just about $4 million. The split is a 60-40, 60% to the limited partners, which is our LPs, and 40% to the GP, which is our general partners. You will get 100% of your equity returned on sale. The actual total return on the investment, it's about a 1.8x equity multiple. Again, that IRR just above 17.5%, 7.22% cash on cash return. We will be doing cost segregation studies, so we can expect depreciation and significant tax write-offs that will occur here.
So the ways that we feel that this asset is mitigated from the risk of recession is and other risks like construction risk and value add risk when it comes to labor and material costs and whatnot. We have a brand new building, so our repairs and maintenance budget is going to be low, and we have all new appliances and flooring and fixtures, et cetera, et cetera. So it's all warranted, and so we're excited about that. And we also have a very affluent tenant base, one of the most affluent areas in Ohio, in the immediate submarket. And that's going to translate to a very hopefully good tenant base that where we have no delinquencies and no hiccups in the financials moving forward as a result of poor tenant base. We've got a really high demand for affordable housing, and while a $1,300, $1,600 rent might not sound affordable to some of us, it is a very affordable option to a $750,000 single family house, which is what the other options look like in this market. So you mentioned the expanding economy, and we also, as Chelsea mentioned, we do have a fixed interest rate that is locked in for the first 5 years. So we're feeling like this is, in the event of a recession or inflation, that this is actually a hedge against inflation, in that our rent growth is going to be very solid and strong moving forward, and it's going to, largely keep up or beat inflation, we hope. And so we're feeling very strong about that. Just a little snippet into us, and I'll introduce our team here in just a second, but these are actually 7 of our properties. Chula Vista and Villa Verde in the bottom corner are 2 separate properties that total 192 units. Most of our projects have been fairly heavy lift value add projects that we've done a lot of heavy asset management and construction management with. And so we as a team have really, I think, kind of gotten chiseled on some relatively difficult projects that just required a lot of TLC and a lot of presence from us. As you can see, we do invest primarily in the Columbus, Ohio market and the Oklahoma City market. We're actually based in Utah, so we do have some property here as well. So I introduce myself real quick. I'm kind of the captain of the ship, I guess, at Greenlight Equity Group, CEO. And I just have a passion for this industry. I wake up every morning absolutely thrilled to be able to do this for a living. I think it's such a fun ride. And I have a passion for really improving properties so that residents have a high quality of life. And we have a passion for doing highly profitable properties so that we can return great solid returns to our investors and do it over and over again. Chelsea, as you have met tonight, is she's our acquisitions specialist. She and I do our acquisitions processes largely together, underwriting, writing LOIs, negotiating, and she and I will both do market visits frequently. And Chelsea has an extensive background in design and also architecture. And so we have a strong focus on our aesthetics with our company and with our properties. Chelsea loves to ride horses. So Carl York is my longtime business partner. We've been in business together for 22 years in different capacities. Carl is a project manager, and he's our CEO or COO rather, and a very experienced project manager. He's terrific at asset management. He also handles relationships with our attorneys and investors and just a variety of different relationships. And so Carl really does a great job for us. And then Mr. Tim Watkey is our KP on most of our deals and will be on this one. And he has been in the business since he was 16 years old when he bought a fourplex in Detroit. And he now has about $140 million portfolio, mostly multifamily in Salt Lake City, but he does own in the Midwest as well. I also will mention we do have on this particular deal, we do have a boots on the ground partner that we're working with, that it will be helping us out with asset management. And and his name is Alex Marsh in Columbus. So we mentioned the Columbus, Ohio market. Weiler Property Management, Weiler Management Company, Skip Weiler is the gentleman's name who owns that. He's been a large developer throughout the greater Columbus area. He developed most of Polaris, which is a massive area. And he has this property management company that manages their properties and other folks' properties as well. We have a strong alignment with them. We work with their broker. And in fact, the broker on this deal is a Weiler broker. So we have a long-term relationship with them of trust and getting good results. With that, we thank you, and we're available for questions. We're going to hang out here. Carl is here and with us in the forum, as is Sue Sharp, who's our executive assistant. She's pretty knowledgeable about this deal and can answer questions. And Chelsea and I are always available as well. And you can see our contact info here. Thank you so much, everybody. Appreciate it.
Outstanding, outstanding, outstanding. Thank you so much. Now, for the audience, for the Sharp Pool community, I have a question for you. On a scale of 1 to 10, how do you rate this deal? You will see it pop up in the chat right now. How do you rate this deal? 1, 3, 5, 7, home run. Need more information? How do you do it? Okay, 5, 4, 3, 2, 1, and polls. Share results. We got some people, I don't think some home runs, some people on some 7s, some 5s, and some 1s. So yeah, a great feedback as well, right? Now let's see, stop sharing. Now, if you could invest in this deal, how much would you invest? If you could invest in this deal, how much would you invest in this deal if you could? 5, 4, 3, 2, 1. Share results. Yeah, some people interested in this deal, so it's good. All right, we're gonna stop sharing that. Now, my question to you now I'll put onto the now a question also. One more thing. Now, if you want somebody to reach out to you, it's the form below in the chat is an interest only form. Put information in there if you want to reach out to you to learn more about this deal. Also, I got it from the poll. Now, first of all, I want to go Irish Kevin. Go to the Sharks. Irish Kevin, you ready? Try it now, Irish.
Here we go. Am I on?
Yes, sir. You're on. Your mic is on. Let's roll.
Yeah, hey, let's rock and roll. Tate and Chelsea, that was a great presentation. Good job.
Thank you.
Thank you.
I'm more used to the larger deals, so just try to help me like with my thinking as far as how this is going to work for like an investor like me that's more involved in larger deals. I know it's only 43 units, and I'm not sure, like usually with a small amount of units like that, can you really afford to have management on site, or is this going to be like a shared system?
Yeah, the being fully leased when we purchase it is going to be an important aspect of basically we've got the Weiler company that's planning on having basically kind of on-call leasing agent that will spend part-time office hours there. We won't need to have a full-time office hour protocol. And then we do have 24-hour maintenance availability through Weiler. So they're very responsive with fixed calls, so repair calls.
And they're in the local area?
They are.
They're
Yep.
in the local.
Yep. They developed a lot of that northeast part of Columbus.
So you have a leasing office. You have a leasing office.
What's that? I'm sorry, I broke up for a sec.
You have a leasing office there. Is anybody going to be on site?
Yeah, like I said, they'll have part-time hours on
I'm
site.
not sure if he's breaking up.
Is it me or is it?
Okay,
I think it's him because
Okay.
I hear on side as well. I think the question was is there a leasing office on site?
There's a leasing office on site, and to answer his other question, we will have part-time office hours.
Okay. So this builder, is he like a merchant builder? Like, is he familiar with like that area and that product and everything?
I'm not sure what you mean by merchant builder. I
I
apologize.
mean, is he just building a cell, or does he have like other product that he?
I understand.
that he
I understand what you mean. Yeah, he builds and holds a lot of his stuff. He built this one in order to keep it. He really kind of spared no expense on it. He actually had an Amish framing crew come down to frame it from Northern Ohio. And you know, the flooring that Chelsea mentioned is like a stone composite tile that is really pretty unbreakable. He just kind of went the extra mile in lots of different ways with the idea that he was going to keep it.
So, like, what convinced him to sell the property?
Well, I think he regrets it now. But he was wanting to recapitalize into another larger deal that he was doing. And obviously the reason I'm saying I think he regrets it is because things have changed so much since we went under contract with just a massive, detonation of the economy with ignition of the economy, I guess is a better word, with this Intel announcement. So, yeah.
Okay, and then Chelsea did mention it has to be 90% occupied by closing. Is that requirement by the lender?
It
Yeah.
is, yeah.
So
Yeah.
what happens if it's not, reaching that spot?
We won't be obligated to close until it does contractually.
Okay, so might be another month or two extension, or?
Yeah, I mean, we would essentially be giving them an extension because they wouldn't be meeting the conditions of the sale.
Yeah, because they'd have to fill it up like another 30%, like in a month and a half.
Yeah, they're projecting June 1st actually to be full. We'll see if that happens, but that's what they're projecting. Obviously, this is a very good time to be leasing. So
Yeah, that's an aggressive schedule, but hopefully they can do it without, loading up some questionable tenants. But
So kind of,
what do you have for sales comps for that Class A property?
there aren't many sales comps in the immediate area. So as far as cap rates go in Class A, there are sub 5 cap rate sales in the Class A in Greater Columbus. But there's just very little apartment product in this submarket in New Albany. To
I
speak
would
of.
imagine it's mostly like a B- C type, like properties in the surrounding area.
There's a lot of B properties in the surrounding area. Yeah,
Okay.
yeah.
And in the financing was fixed 5 years, and you said you do have an option for,
Correct.
it's another 5 years.
Yep, that's correct. Yep.
Okay. So I would imagine, I don't know if there's a cost on that, but usually they'd probably charge you like a point or something like that.
Yeah, I don't know the answer to that question.
Okay. Well, now, where'd you come up with the 60-40 split?
Well, when we penciled the deal and underwrote the deal, we wanted to achieve, a 17 or an 18% IRR, and it's how we've done all of our other syndications, and we do that so that it's a win for everybody, quite frankly, and we're obviously in business to make a lot of money for our investors and want to do everything we can to do that and do right by them. We felt that the returns were strong for that and would support that.
Now, is that another reason why, because the fact that the property is smaller, is that why you had to come up with that type of a split?
Yeah, I mean, as you pointed out, it is a smaller deal. we feel like it's being a brand new property, fully leased up when we buy it. It's a turnkey, momentum play that is pretty dang risk mitigated. And that's another reason why I think we've structured it the way we have, is because it is a lower risk deal. It is a little bit of we typically do 3 to 5 year models when we model our deals. And this one did model really well at a 5 to 7 year model. And so that's what we ended up going with.
So it's more like a longer term hold, I would think, versus a value play or,
Correct.
I mean, there's no CapEx, basically. There's no like business
Right.
plan as far as what you have to do.
Yeah.
Okay, my last question would be, what about fees? What are you guys charging?
We charge on this one, a 3% acquisition fee,
3%. What about asset management?
a 1.5 in asset management. And those are our only 2 fees. We don't charge a capital transaction fee or anything like that.
All right, so there's no exit fee, there's no
No.
disposition fee, there's no
Right.
refinance fee.
That's correct. Yep.
All right, that's good for me. I like the property. Obviously, it's brand new. So you don't really have to look into deferred maintenance. It's a good hedge, I think, against inflation, especially in these times right now. So I like it, and I wish you luck.
Thank you so much. Really appreciate your thoughts and questions and feedback.
Outstanding. Chelsea, you just make sure you guys got some questions in the chat if you want to go through that later on. I'll say, but I'll go through that after Sanjay. Sanjay, you up? You ready, Sanjay?
All right, sounds good. Hey,
Outstanding. Thank you so much.
all right, hey, great presentation, guys. It was a solid presentation, and being an ex-Intel guy for 24 years, you got my attention on this deal for sure. The location looks like it's about 5 miles from the site. Is that correct? I don't know the area real well.
It's actually about 11 miles from the site.
Okay. All right, that's still. And I thought I heard you say a $200,000 gross medium household income. Is that in the area the site is located, or
That's in
the area your property is located?
It's in New Albany, where the property is located, but the municipality that they're naming for the Intel plan is also New Albany. So now the plant obviously is out in the middle of a former cornfield. So I wouldn't think that there's like 220,000 right there in that immediate vicinity with where the plant is, but where our building is, that is the gross median household income.
Yeah, that's what I was wondering. Okay, it is for the area the building is 200,000. And what is there any other Class A properties in that area? And I know you showed me the list, but I couldn't tell if those were all Class A or they were a mix of B's, C's.
Yeah, they're a mix of B's primarily.
So this was he started at $1,200 on a new Class A. Did he not look at what the Class Bs were renting at? I guess because
right.
You got 60%. The positive is it's great. You got some upside. The negative is 60% is, 10 to 15% below market in terms of rents, and you're stuck with those for a year.
He's been escalating as he's been in lease up mode. The rent, he's been achieving higher rents. So he's anywhere from $1,200 to $1,350 just for a 1-bedroom. As the leasing picked up, they, in the event that for some reason this deal fell through and we weren't going to close on it, he wants to have good tenants in there who are going to be paying top dollar.
Okay, got it. But then you're going to be, I would assume, I don't know what you assume because there's not really a T-12 here. Your pro forma year one assumes his rates under market, and then you're resetting in your pro forma in year two to 10% additional, or how are you going from, usually you go from T12 to here, but what are you going from year one to year two?
Yeah, it's closer to about $150 to $200 rent increases. So we're currently underwriting the 1-bedrooms at $1,200, and year going into year two will be $1,350.
Okay.
And he has the 2-bedrooms, 2 baths at $1,500. Some of which, again, he's leasing currently over that price, and we're targeting $1,650.
Okay, gotcha. Okay,
Yeah, he's leasing, I think, the one beds now for 13. I think
okay.
that's, yeah.
Yeah, I mean, that's just, it's interesting for a brand new property that he was that far off of market.
Yeah. Yeah. To be totally honest, the property management company that he hired isn't who I would have hired. Let's put it that way.
Okay.
So I'm not sure that they just necessarily did a great job for him.
Okay, gotcha.
Um,
Okay, that part was good. One question, I didn't hear what the loan size. So I saw the 9.3 buy, the 4 million raise. What is the loan?
we're at 6.7 is our loan amount.
6.7. So what is
Chelsea,
what
that
is,
was Chelsea, you want to chime in on that? The reason I'm asking for Chelsea's input is we just got off the phone with our lender this afternoon with our kind of final loan program. And it ended up being 69.5 something percent.
Yeah,
Yeah, that's what I
LTC.
was-
about 5.7 million.
Yeah. Oh,
Or-
5. Oh, okay. I was off.
6.7? Sorry, is that what you said? 6.7 million?
5.7.
Oh, your loan is only 5.7?
Yeah, it's about 70% leverage.
Sorry, I'm just,
Yeah, I don't think that's right, Chelsea.
yeah, that doesn't seem right.
Yeah,
That
I said 6.5 was what I heard today.
I can get back with you if you want to.
Yeah, we can get back. No, but
Yeah.
it looks, that looks pretty good.
Yeah,
Yeah.
it'll be about 6.5. That's 70% of 9.3.
Yeah,
million.
6.5. Yeah.
Okay, got it. And then, sorry, a couple more questions. So the rate looks solid. I'm glad, I mean, in this market, it's great you got the solid rate. And that's rate through 10 years with the extension, I assume, right?
5 years and then another 5-year extension with no prepay if we
On the
decide.
same rate?
No, the rate would adjust to I believe it was 2.6 bips above the 10-year treasury.
Oh, okay. All right. So at that point, it's a readjust. So it's, so I would just, would you, given where the rates are heading, would you try to exit within the 5 years? Because that would become a potential issue, right?
Yeah, I mean, I'll just be completely transparent with you. I really think that we're going to double our rent bumps that we've underwritten. Just the way that we had 12.5% rent appreciation last year there. It's the supply and demand factor on single families is off the charts there. And I think we're gonna more than beat our pro forma in the first 5 years, but you know, that's not what we underwrote or have advertised. But that's my honest take on it. And, you know, our property managers and lenders, our brokers tend to agree. So, yeah.
Okay. And then one last question. So, or actually two last questions. One, what is this, what are you guys putting in as part of the 4 million?
We'll be putting in at least 10% of that as a
Okay.
GP. Yeah.
Okay, that sounds good. And then, sorry, I did have one more. What are you doing with the additional 1.2 million? Is that just being used primarily for paying the preferred? Or you have other construction that he didn't finish that you have to go finish?
No, there's no construction to be finished. I honestly, I would have to kind of dissect our sources and uses for a minute before I could completely answer that. Chelsea, do you have a little better perspective on
Okay.
that?
Mhm.
Okay.
Okay, all right, yeah, that'd be interesting to, but I mean, overall, it looks like a solid deal. I think you guys got in right location, right time, not too much to mess around with. I think the rate bumps, you know, we'd have to I'd look at the pro forma, but from a timing, location, all of that, it looks pretty solid in terms of what you got in fixed, you know, you got a solid loan too, which is good, versus a variable loan right now. So
Yeah.
I like it.
Thank you.
Thank you.
Thanks for your thoughts. Really appreciate it.
Yeah.
Outstanding. Thanks so much. Say like a deal. So he reach out to you more information about the deal. I put information in the chat. If you want more about information about the deal as well, you pull the link up again. you'll see the information inside our A-Buster portal. I will put it, I'll put it here again, so get information if you want to learn more about this deal. Okay, well, gotcha. It's inside the chat as well. And also we got to do a breakout room session. You will see Chelsea and Tate in room number 1. Go to that room and you can ask them direct questions at this time. Thank you all. I'll go to our next portion of the show. Okay. Yes, hold on, Valerie, you got a question?
Can you read me? Okay, there. Do they have questions? I haven't even had a chance to check the chat, but do they have questions relating?
Yeah, I guess right now, yes, this is it. Y'all want to take any questions?
Sure. We can take some questions.
All right, I do that. Well, I'll do this real quick. Feel free, unmute yourself, raise if you have a question for him. Go right ahead.
There was a question in here in the chat about have we completed any prior cycles in New Albany or Columbus? The answer to that is no, we haven't. We are looking at a full cycle on one of our 3 properties, one in central Columbus. It's a 70 unit portfolio. And we're starting to put the ball in motion to dispose of that one. So we're coming up on a full cycle, but we haven't done a full cycle in New Albany or Columbus yet.
Outstanding. So I'm gonna go ahead and put you all in the room real quick. Right? Vic, you got a question, Vic? Are there any risks?
Are there any risks that you didn't list that concern you, and what are you doing to mitigate? There really aren't. I mean, being, physically being brand new is, very reassuring. We did have the place professionally inspected, and so we know all the nooks and crannies. And I guess the risk that I see is morely like on the macroeconomic level, and I feel like we have captured an asset here that mitigates a lot of that because of what's going to go on in the micro level in the immediate submarket and what's already happening there. So yes, Kathy, to answer your question, yes, fixed interest for the first 5 years at 4.25. Yep.
Good deal. All right, so I'll put your information in the chat as well, and we'll go to the room so y'all can talk more about that. All right. Thank you all.
Thank you.
Let me know if y'all need anything from me. I'll be here.
Thank you.
Oh, let me see this. Y'all back in the same room.